Hey guys, it's Dave, your mortgageguy.com, and big announcement just came out from Fannie Mae, Freddie Mac. So conventional loans for self-employed borrowers, okay? Here are the big things you need to know. Number one, it's based on any loan applications that are dated June 11th and on, okay? Which means that they were disclosed, the loan process has started, things like that. If it's before that, these rules may not be in effect, though it depends on the lender. A lot of lenders were adapting this before it was officially announced. So something to keep in mind. Here's what you need to know. On self-employed borrowers, a profit and loss statement is needed for, let's say they haven't filed 2019, so they would do one for 2019, or if they filed it for their business after when they filed their tax returns, right? Now, this is self-prepared, so the client is preparing the profit and loss, okay? So something that usually works itself out, okay? The next issue, and the bigger issue in the change, is that now you're going to need to provide the last 2 months bank statements, personal or business, depending on where the money's coming in, right? So if they own a business and the deposits go into the business bank statements, you're going to need those, okay? If they run their business and they put it into personal, you're going to provide those, okay? Underwriting now needs to verify that those deposits line up to the income that's being reported from the tax returns and the profit and loss. Is it in line? So if they made $10,000 a month on average for the tax returns, the profit and loss, but their bank statements only show $2,000 for the last 2 months because of COVID and whatnot, that's going to be a big problem, okay? Now, being in line is a gray area to begin with because people's businesses go up and down. So maybe their business is heavy at the end of the year, but those months that happen to be during COVID were lighter. That's really going to be an underwriter discretion thing, which is what concerns me because it's very gray. It's not black and white. So you may have some scenarios where an underwriter expects that the income is the exact same or they'll deny it. And then you may have other underwriters who are going to be more going to look at it case by case and see if it makes sense. Okay. Now, this is going to be through technically the end of July for loan applications in theory. Okay, so that's something that's going to continue to happen. So if you're working with a buyer who is self-employed, you need to immediately have them get pre-approved based on what their situation is currently. Okay, if you have a self-employed borrower in underwriting or in the process, I would reach out to that lender just to confirm that they're not changing their guidelines while they have that loan. Okay, for myself, we're going strictly by the book. Any loan application from 6/11 on, we have to follow this guideline, but we're not going back, okay? This does not automatically imply that jumbo loans are going to follow this rule. Jumbo loans could be harder, right? Or follow the same rules, okay? This does not fall into place for FHA loans, at least not at the moment, okay? So a huge announcement, something that could cause problems, and an additional layer of things to keep in mind when you're having a self-employed borrower get pre-approved, right? So not just the tax returns. Have they looked at the bank statements? Have they looked at the profit and loss, which is self-prepared by the client? So think about that also. All right? Call or email me with anything. Comment down below, and if you find my videos helpful, I'd love to be your lender. Thanks, guys.